Hello, I am Mani Malarvannan. In this video, we will look into ISO 222, how it is bridging the gap between the crypto industry and the traditional finance industry. For the past 3-4 weeks, we have been looking into various cryptocurrencies and how ISO 222 standards are emerged, how it's getting integrated. If we need to know more about each of these standards, ISO 222, on what are all the different types of crypto blockchain networks that are adapting to this international standard, please go and watch those videos. We also provide links in this video. In this particular video, we will concentrate on four blockchain networks that are focusing on ISO 222 more in depth and see how ISO 222 is bridging the gap between traditional finance with the crypto finance. So the foundational crisis that we have in the crypto industry is integrating with the traditional finances. It's a fragmented system. If you are thinking of legacy integration with the traditional system, it is really fragmented. Each bank has its own format of sending messages, and then the receiving bank has to go through the manual or semi-manual process to understand what the transaction means. So there was no universal standard between communication between two banks within the traditional system. Here, the traditional system, what I mean is the banking systems, what they deal with the fiat currencies. And then the crypto market is what we are talking about, the digital currency, various blockchain networks, crypto stable coin, and various other coins. So integrating those two is a real challenge because already the traditional finance is fragmented. And then there is a high cost for each traditional banking system to integrate with various blockchains because there is no one blockchain exist. There are hundreds of different blockchain exist, and yes, some of them are very popular like Ethereum and Solana and at Bitcoin. And there are other blockchains, less popular blockchains are also exist, and those are all getting popular. And the question comes from the traditional finance systems, which one they want to integrate. Because if they want to integrate with Ethereum, it solves one purpose. If they want to integrate with Bitcoin, it solves another purpose. So all these blockchains are relatively good, and it takes a lot of money and effort to integrate these between the traditional finance and the crypto finance. So there is a lot of money needs to be upfront involved to create these standards. And also there's a lack of transparency because traditional finance, they really want to have transparent rules and regulations so that they can able to go back and see who sent the money and where it went, so that in case of regulatory issues from the government, they can able to produce all the transactions. That's not possible before. But now with the ISO 222 standard, it's getting possible for anyone to track the money, anyone meaning the regulatory boards and financial institutions, they can able to follow the money from where it originates and where it was finally sent and who received it. All those informations can be encoded within the ISO 222 standards. So what is ISO 222? In short, it is a rich data format that is created by the international financial community, which are accepted by all the countries and also all the financial institutions all over the world. If there is a bank in China or India or Europe or US, they all decided to follow the ISO 222 standard, so that a person sending a money from US to say Mexico, that if the financial institutions, the banks, those who are sending the money to Mexico, they can able to follow the ISO 222 standards. That means They can able to encode all the informations about the sender name, address, government issued ID informations, how much money, and also the receiver information, receiving bank, receiving person's name, address, all those informations are encoded within the bank. So when the sending bank from US sends the money to the receiving bank computer systems can understand what was sent from the sender's bank and what is received in the receiving bank. The programs can able to understand there is no manual steps involved. So this completely eliminates the time it takes for the sender to send the money and the receiver to receive money. Without this ISO 222, sometimes it takes weeks for the sender to send the money and the receiver to receive the money. But now with the ISO 222, if not weeks, within couple of days, the sender can send the money and the receiver can receive the money as fast as possible. Still, it's not going to be as fast as the digital currency that we are talking about in the crypto industry, but definitely it is faster than the old legacy networks where it's not possible for the computer systems to understand each and every transaction. Imagine in a day there are millions of transaction happens, so for all those things, if they have to go through manually to understand if the some data is missing, it takes time for the intermediaries or the banks to identify if there is any fraudulent transaction happens so that they can able to report to the authorities. So that is the main purpose of the ISO 222 standard. It is XML based. XML based meaning it's a rich format. You can able to encode all the information so that the computers can understand. So this helps to structure the data that is being sent from one banking system to another banking system within the same country or in the international cross-border transactions. So, and also it's interoperability. Since all the financial institutions are going to share the same format, a bank can able to transact with any other banks in the world, whichever follows the ISO 222 standards, because everybody speaks the common language. It is like speaking in a group with everybody understands and communicates in English. Without the ISO 222 standards, then each person speaks in their own language. Obviously there is a chaos happens because you can't understand what the other person is talking if they speak in their own language and you don't understand that language. So you need an interpreter to understand, and if 10 people are there, if the 10 people are speaking in different languages, you need the 10 interpreters to understand, communicate. That takes time, energy for everybody to understand what the other person is talking. So that's what the ISO 222 standard solves in the traditional financial industry. And how that ISO 222 standard is going to help the crypto industry. Let's first talk about what are all the issues the crypto has. The main issue the crypto is facing is the volatility because it is traded 24/7. At one point of time, the same amount of crypto coins that you have, value may change drastically. It may go up by 20%, the next moment it may come down by 20%. So it is very volatile. Whenever it is volatile, it is very difficult for traditional finance to use it on day-to-day transaction. For example, you can't use crypto to purchase a coffee because, say, if you have two crypto coins, the value may change. You have to pay for the same cup of coffee. You have to pay three crypto coins of one time because the value fluctuates, and then some other time you have to pay only one crypto coin. So it's not going to be helpful for anyone to use crypto coins for day-to-day transactions. But in the traditional finance, in the fiat currency, if you have $3, the value is going to be $3 all the time. So you can buy the same coffee using $3 any part of the day. So it's not going to fluctuate. So that is the advantage of traditional fiat currency compared to the cryptocurrency. So, and that's what the traditional currency industry needs from the crypto, and that's what it's going to solve because of the ISO 222 standards. We can see how it's going to solve the issue. And then The lack of standardization. We talked about earlier that there are multiple different blockchain exist. If your bank want to integrate with the blockchain network, they have to go through multiple different interfaces. They have to develop multiple interfaces, one for Bitcoin, one for Ethereum, one for Solana. It's going to take a lot of money and effort for each financial institutions or banks to do it, and each bank has to do it, it's in their own way, because within the banking system not all banks are going to follow the same process, and they have a different formats to understand the transaction. So there is, if there is no standard, then it's going to take a lot more energy, time, money for individual banks and financial institutions to integrate with the various blockchain networks. And also, if there is no regulatory feedback from the cryptocurrencies, then it's very difficult for traditional banking system to use cryptos, because they need to have a proper transactional channel so that they can able to understand where the money originates and where the money finally ends. Yes, within the crypto you can able to track it, but it is an anonymous. You can able to understand, you can able to get the public address of a person, but you don't know who the person is. You know only the public address, and that's been stored in the public ledger. That is the whole purpose of the crypto blockchain networks. But you can't identify, you don't need to identify, but if there is a issue comes, if there is a huge money transaction happens, if the government entities or other legal entities want to follow where the money originates, who ultimately received it, you cannot able to easily find within the crypto network, because it's an anonymous network. But in the traditional finance, it's easy for anybody to identify where the money went, and what exactly happened to the money at the end. All the transaction you can able to follow, and traditional finance needs that type of regulatory framework approval so that they can able to integrate with the crypto. And operational issues, whenever you try to integrate with the two different technologies, and that too not all the technologies are same, it's going to take a lot of operational issues, because you need to use one way to integrate with the Bitcoin, and you use a completely different mechanism to integrate with the Ethereum blockchain, because those two are two different blockchain networks, and those are all the issues, and the ISO 222 is going to solve for us. So how ISO 222 is going to bridge the gap? The main purpose of ISO 222 is the standardized compliance of data, so that there is no anti-money laundering happens, and also know your customer, KYC. You can able to understand who the person is sending the money and who the person is receiving the money. You can able to encode all the informations, and it is being approved by all over the countries and all over the world. So any institution, if they want to follow ISO 222, they are going to send in the same format the sender information and then the receiver information. And wherever the money goes, whichever country the money goes, the receiving entity, the financial institutions can able to understand the transaction that happened, and they can able to easily identify who the sender is and who the receiving person is. So there is an operational efficiency that happens. You don't need to have a manual intervention of identifying the transaction if there is any issues, because computer programs can be developed that can understand the ISO 222 standards, and they can able to integrate with other systems, computer systems, to identify all the informations about the sender as well as the receiver. And this solves the major problem of interoperability. So any financial institution can able to interact with any other financial institutions more easily, because it's all automated. And there are a lot of crypto projects started using these ISO 222 standards to integrate with their blockchain network with the traditional finance networks. So that is the main purpose the ISO 222 is going to solve for the crypto world. See, even though ISO 222 was created to have a standardized mechanism of integrating traditional financial institutions. Now the crypto industry is following these ISO 222 standards in all the transactions, so that a crypto network can able to send money to the traditional financial institutions, and similarly a traditional financial institution can send money to the crypto networks. So that's the whole point of this ISO 222 bridge that connects the digital currency, the crypto industry, with the traditional industry. And there are four crypto networks we are going to discuss now. And if you need to know more about these individual networks, please visit and watch our previous videos. We have exclusive videos about this, all these XRP, Stellar, Algorand, and Hedera blockchains. We discussed it. And in this presentation, we will look into closely these four blockchain networks, and we can able to find the difference between all these four, and we can see how these are all using ISO 222. The main advantage of the XRP Ripple network is they have been using ISO 222 since 2020. So they are the one among the very first crypto networks. They started integrating all the transaction using the ISO 220 standards. So any bank or any institution want to use this XRP, they can able to use it right away and use the XRP tokens to send money. For example, if a company in US wants to send money to uh, Japanese currency, all they have to do is that use the XRP network, use their US dollars to purchase XRP, and then instantly within in the Japan, the XRP can be converted into Japanese yen, and they can easily convert it, and it's almost instant. So that's the main advantage of XRP. And then in the stellar network, it's basically it's used by the big financial institutions if they want to create multiple different traditional slash crypto products. They can able to use a stellar network, and they can create various financial products using the stellar blockchain, and it also follows the ISO 222 standards. And then the Algorand. So the main advantage of Algorand is that any central bank or any bank, if they want to issue their own cryptocurrency, they can able to use the Algorand blockchain networks to create various digital currencies, digital products using the Algorand. And then in the Hedera, it is governed by multiple different financial big companies like IBM, Google, and if they want to send any money between their network or their partner networks, they can use the Hedera to do that. Since it is governed by large companies from the beginning itself, so they have a financial and regulatory backing from the big companies, and also since it's all being used by the big companies, they can able to integrate with their internal ERP systems to send and receive money. So if you need to know more about these individual blockchain networks, visit our previous videos. We have explained it clearly. So the tipping point for this analysis, there are pros and cons of using ISO 222. In the pro argument side, the main advantage is they're removing the major financial barriers. So it completely eliminates the technical integration between multiple different systems from the crypto market or crypto networks to the traditional financial networks. And that is in the pro argument. And then still there are challenge remains because the regulatory side, it is not crystal clear how it's all going to be integrated. Yes, there are crypto markets, blockchains are started integrating with ISO 222. There are some issues still there, and regulatory industries and financial institutions and the crypto markets, crypto networks are all trying to ash out and completely trying to come up with a bulletproof system. It is still not clear in many situations. That is a major complaint. People are talking about ISO 222. And then the facilities of the trust. The one of the main pro argument is that how it's going to make sure that regulatory networks can able to understand the money movement, because it is being fully coded with the sender information and the receiver information. So the any country can able to understand the transaction, and they can able to audit if needed. So that is a main advantage of using ISO 222. And then in the challenging side, there is still a cultural inertia, because the traditional institutions are very slow to adapt to the new standards, because there are a lot of regulations governed within the each country. Yes, US is in many ways advanced in the technology, but there are a lot of countries still they want to follow the old reliable networks, and they don't want to spend time, money, energy to integrate with the new technologies. So that is still a problem. And then in the pro side, integrating crypto and traditional networks using ISO 222 standards are going to open a lot more new financial products for consumers to use it. Say, for example, if I am based in India, and if I have 1 lakh Indian rupees, and rather than keeping the 1 lakh rupees, I can buy a stable coin and I can keep it in the crypto, because if I buy a stable coin that pegged to the US dollars, then I can hold my money, the 1 lakh money, in the US dollar. I don't know whether the Indian government is going to approve it or not. If the Indian government approves, then it's going to open up a lot more financial products for consumers. Eventually, it will open. But right now, the standards are not there, because the stable coin market standards are being created a couple of months back in the US. And there is going to be a lot more changes, a lot more countries are going to adapt the stable coin. So it's going to create a lot more financial products for individuals to own it. So that is in the pro side. And then in the challenging side, it is still not clear. See, I said that I can able to purchase a stable coin, but if I am in US, yes, I can able to purchase a stable coin based in US dollars, or if there is a stable coin based in UK or Euro, I can able to purchase it, because this government is open. I can able to have money in whatever stable coin I want to do. It's not the case if you are in India, if you are in Mexico, the policies are being formed and the new rules and regulations are being created. At this time, it's not there for the consumers. See, the ISO 222 is a necessary catalyst and standard for all the traditional markets to integrate with the crypto market, so that both can coexist and ultimately consumer can benefit from it. So it is a low barrier for any cryptocurrency markets or networks and the traditional networks to start using the ISO 222, because there is no licensing fee or anything they have to pay to use the standard. It is the general standard, and it is applicable, adopted by all the countries within the in the financial institutions. So it is a less risk for any company to start integrating it. And also, since it is being adopted by all the countries, then there is you all automatically get the regulatory framework when you start using the ISO 222 standards, so that whoever wants to audit, they can able to audit, whoever, meaning whichever country they want to audit the money cross-border transaction, they can able to audit the transaction for their citizens. They can't audit if we are in US citizen. So the US companies, US government can audit their US citizens. Similarly, the Mexican government can audit the Mexican citizens. So that's possible using the ISO 222 because of the standard format that's being transacted. And it's going to create various use cases, various products for consumers to use it, because there's a lot of growing demand within the crypto industry, and obviously there is a lot of people are using traditional fiat currency. So once you start integrating these two world using the common platform ISO 222, it's going to create a lot more business opportunities, a lot more products for the consumers. So that's all I want to discuss in this video. If you have any questions or comments, please let me know. And if you like this video, please subscribe and forward this video to your friends and family so that we can grow and produce more videos like this. Thank you. Bye.